Hello, guys. Today we have on Smac, who is one of my internet friends, also a VC, somebody I chat with a good bit, and usually I think has pretty level-headed takes. So, Smac, welcome. Feel free to introduce yourself, and a little background if you want.
Thank you. Thanks for having me, Gwart. Level-headed. I guess that's I'll take that as a compliment.
It is.
I'm Smac. I'm a partner at Compound. We are a thesis-driven, research-centric investment firm, which is investing across a handful of kind of, I don't know, I guess you could call them deep tech verticals, one of which is crypto. So that's where I spend my time. The other areas are kind of like traditional AI, ML, robotics, and then healthcare, which is a lot of like syn bio and computational bio stuff that goes over my head for the most part. I don't know. I've been in crypto now, I guess technically 10 years, which is kind of nuts. Although the first like 2 or 3, I kind of was just like a Bitcoin holder. So I didn't really know what was going on. But yeah, joined Compound through Twitter. So every time people ask like, I feel like, people ask me or DM me about like, hey, how do you get into venture? And I'm like, well, I don't know if that's necessarily like you necessarily want to get into venture, to be honest.
So first thing is, I don't recommend it. Second,
like,
though, tweet.
But yeah. Joined incidentally through Twitter, which is kind of funny. I've been at Compound like three years now, something like that.
Nice. Okay, so give us like a little overview on the market right now and what's interesting to you, where you guys are investing or looking to invest or anything.
Yeah, so we're typically also like ideally the first check, so like pre-seed and seed stage. We're a relatively smaller fund, and so the earlier the better for us. It's like very much science project idea stages and founder led. So I don't know. There's like a bunch of stuff we're interested in, I would say. On the crypto side specifically, I don't know. I'm like more recently been spending time in kind of like the super boring finance parts of, I don't know, of like capital formation, I guess you could say, is like, to me, the promise of crypto is always an inevitability of finance being done more efficiently on crypto rails. That's like the high level thing that got me crypto pilled. And we haven't really seen that outside of stablecoins. And I'm kind of allergic to the discussion about stablecoins. It's like, yeah, we get it. They're great. I'm not sure where I sit in my seat, how I can like make money for our LPs investing in stablecoins at this point. Like, cool. Yeah. Tether's an awesome business. Like everybody knows that.
Have you been, sorry, let me ask you something really quick. From your side, have you been surprised at the degree to which stablecoins have been put forth kind of as the killer use case as of late? I mean, I know this has been a discussion for quite some time, so I'm not saying this is like completely new, but I have been personally surprised at just how much this has been sort of pointed to as this is what we're trying to do. Almost like crypto should be functionally a way to facilitate dollar transfers. And I don't know, it seems a bit jarring as of late. But I don't know, like, do you agree that it has been more sort of at the forefront than maybe prior cycles, I guess, but also than maybe you would have expected?
Yes, is the short answer. I think I this is something I ask people who I'm like, oh, I think you're like a relatively independent thinker who has like their own views. And I'll ask them kind of like, how do you, like, you're looking at a bunch of stablecoin companies. How do you like evaluate, okay, well, like why is this any different? If there's 1,000 of these things, like everybody gets the high level idea of cool, stablecoins are good. They're more efficient rails. People in developing countries having access to them is like something that they want. I think the outsized like narrative they've had is probably a function of not a lot of net new exciting things being in crypto, where like if there were 15 different super exciting, massive growth companies or novel ideas happening, you would hear so much less about stables. It would just be, yeah, stable coins are awesome. They have huge adoption. Everybody knows it's a great use case. But people wouldn't talk about them as much.
Yeah.
That's kind of why I think we hear about them so much. I mean, part of that is also like Circle, just when you think of like traditional markets and like, oh, is Circle going to IPO? There's like that whole narrative. And then it's just something that people want to talk about. So I have been surprised, but like at the same time, it's like one of the easier things for crypto native people or crypto investors to talk about to non-crypto people. Like stablecoins are great. Like, let me tell you all about them. And then you get like the follow-up question is, cool, what else is going on outside stablecoins that gets you excited?
Yeah.
Because I don't know. To me, they're not they're not exciting. They're just kind of
they're not at all. No.
Yeah.
Like, also, I think maybe a different way to say this. I was asking, like, have you been surprised at the degree to which this has been put forth as like, this is what we're going to sell to the masses? It's not just that. It's more just like, I maybe feel that there's been somewhat of a pivot toward just accepting these as crypto. And to a lot of us who've been around for a while, granted, like you said, there weren't that many, 0 to 1 or, massive unlocks. Maybe they've been like somewhat incremental, but I don't think many of us, even in 2021, I don't recall there being as much acceptance of these as being functionally crypto. Like, I almost view stablecoins as just, they really should be considered just FinTech. And it gets to the point where there's so much discussion around this. I'm like, this isn't really crypto. This is just marginally better, euro dollars. So I do tend to agree. And I also agree. I mean, we are fortunate we live in the United States, that we have access to payment rails. Okay, like none of this is lost upon. This is type of shit's regurgitated, ad infinitum. But at some point, it's like, these also are not decentralized. Like, they provide people in Guatemala with the ability to hold dollars, but are we that excited about that? Do you think there are any ways for, or maybe, from an investment perspective, like, I guess people have been talking about, I don't know, Maker or Athena or some of these, like, are there ways for retail to, you can't really 100x long USDC on Hyperliquid. So are there ways to benefit from this?
I don't know. It's tough. Like, I think that the stuff that you're talking about is like one way to do it. There's the thing that's like more interesting to me that's related to stablecoins is like, okay, so there's one of the, this is a little bit adjacently related, but I think relevant, which is like one of the big initial, ideologies of crypto was, be your own bank and you don't have to rely on these trusted intermediaries. And I think that there's potentially an offshoot of this, which is, if you think about like large institutions today, they generally don't hold like dollars, or like they try not to hold dollars because it's a cash drag, right? Like, I'd rather hold short-term treasuries or something, right? Something that earns some kind of yield. But like the average regular person doesn't kind of think like that, right? They have like a savings account. They probably are net longer dollars than institutions. And so like when I think of the idea of being your own bank, quote unquote, the stuff in crypto that's more interesting to me is like things that functionally are act like dollars, but earn more yields. And like, okay, there's like all kinds of smart contract risk that gets introduced here, and it's like, all right, what is like the hurdle rate for like willingness to take on these types of risks? But I think that's the stuff that is adjacently related to dollars that's more interesting to me on the crypto side, because I do agree, it's like these are like fintech products. Stablecoins are a fintech product for the most part. I agree with you there. And I also think that I don't know why we need thousands of different stablecoins.
Like it's. Well, I think that's probably like a sign of the times, really, because and this has been discussed again by a lot of people. It's just people see Tether and they say, oh, well, if I could capture 0.1% of, how Tether runs their business, that would be a massive, TAM. And if they can like spice it up with, some slightly novel mechanism to generate yield or whatever, and positions themselves as this is a slightly better USDT or whatever, then yeah, like I think that makes sense. But I think that there's massive incentive to sort of coalesce around a much smaller number of stablecoins. So, but yeah, I do agree. Like everyone has a stablecoin right now. It's kind of absurd.
Yeah, like these is like pretty clearly, in my opinion, a power law like
for
market.
Sure. Yeah.
And so I don't see, like, sure, it costs nothing to launch a stablecoin, so like whatever, we'll see a zillion of them, but yeah, that's not super interesting to me. I think actually something that is maybe underrated is what they will do for like the velocity of capital. And so like clearing and the efficiency and like increased capital velocity for networks, that's like actually interesting to me. It's kind of like a boring like weird econ like concept of that. Why would anybody, like, people don't think about this in everyday life, because why would you? But you get a ton of, like, you get more economic growth if you can increase the velocity that money moves. So
for sure,
to the extent that you actually see higher velocity capital moving around, and you have like clearing done in permissionless or decentralized ways that is maybe more efficient than the existing system, that to me is interesting, because that actually ties into the real world in terms of like economic growth. And that's like a little bit fuzzy because it's like a little theoretical at this point, but that actually, when I think of like, cool, what's interesting, it's like things that will matter beyond our bubble of, 10,000 crypto users. And that's the stuff that I personally am like, cool, is there a way this network could exist? And like, where would it capture value? And like, what does that actually even look like? That's like the kind of weird plumbing, I don't know, stuff that I've been spending some more time on the last, a couple weeks, I'd say.
Yeah, I think when you say plumbing, it kind of, a lot of the vision right now feels very back office software almost. Like this is where the innovation is occurring, and it's obviously just not very exciting to most of us who are spending time on crypto Twitter or are been around for a while. It's like, oh, sick, two companies in different countries can now transact or whatever in a way that is just like a new plugin for them. It's like, all right, it's not that compelling. But on that note, what degree of decentralization do you need to send, FinTech dollars around the world? Like, what is your perspective on this in terms of like where the permissionlessness or decentralization is needed when what we're talking about are, centralized stablecoins here? Yeah,
I think so. On the one hand, I don't like, I guess I don't specifically mean stable coins. I think, maybe if you're building like a clearing network, that's like an avenue to have a permissionless stable coin. And like, cool, maybe you think you can compete with Circle and Tether that way. I don't, TBD, but I don't know. To me, this stuff, especially in the US, like the stablecoin stuff is going to be regulated. So it's kind of unrealistic to expect that's not the case. There's going to be some level of like regulatory approval that you'll need, at least on and off ramp in the US is my expectation. I'm generally a view of like decentralization for the sake of it is very dumb because it makes things worse. And so I don't know. I don't know like what the measure of decentralization for something like this is. I think like permissionlessness, is, I mean, they're kind of, you can argue over what the distinction between those two things, but I don't know. I sound like overly pessimistic. I think there's a world in which like some of the privacy stuff, the privacy tech will allow people to maybe prove things about their identity without it being revealed to the entire network. And so that's interesting when you think of that system compared to, I don't know, clearing stuff through a centralized clearinghouse today. But yeah, I don't necessarily have a specific view on like how decentralized should something be.
Yeah, I think, well, the reason that I asked this is because I've talked to Tolly before, and he often brings this up on Twitter, which is that like Circle controls a node, right? And they validate the chain, and it is Circle's single node that gives the true USDC balance of anybody on the network. And if they want to censor, or if they want to blacklist an address, they can do that because they control the real dollars outside of the system. That wasn't very eloquently said. But what happens, so I think that and I completely agree with him for what it's worth. Like Circle at the end of the day is the real counterparty. But the problem, I say problem, what I take this to its next logical extreme is like, okay, then why do we need the blockchain part? If it's just Circle validating the legitimacy of the USDC, then what benefits are there for all of us to around the world to come to consensus on a distributed network when you're always going to have Circle as your true counterparty? And so I understand what Tolly's saying, but I'm just like, okay, so then why don't we just run one sequencer? You know, if it's just Circle, then Circle can just run their own blockchain. And so it kind of starts to muddy the waters from my perspective. I mean, I guess like, you know, composability, the counter argument would be, you know, composability with all this other stuff, blah, blah, blah. But I do like, once I start thinking and I go further down that line, I'm like, okay, so then Circle can just remove themselves from the Solana blockchain or the Ethereum blockchain and just have their own blockchain if that's who we agree is at the end of the day, like the final counterparty.
Yeah, I think that's true. I mean, this is partly why I prefer Tether anyway.
Yeah, agreed.
Like, yeah, I would much prefer to use USDT for that reason. It's like, cool, Circle USDC is Circle coin,
right?
And so I don't know. I don't think. But here's the thing. I don't think a lot of people care, right?
No, they don't.
So that is it's almost like yeah. This is almost. I don't want to get into an Ethereum discussion, but it is almost like adjacent to that conversation.
No, it definitely is.
Ethereum people complain about like other networks because they don't meet the Ethereum view of decentralization. And it's like users, you have to understand what users actually care about.
I mean, most USDT is settled on Tron right now. I mean, it's like you can just look at the market, right? It's not, we don't have to get into theoretical debates. We can observe what is occurring in practice. Yeah. You know? Another thing too is, I mean, I bring this up a lot, which is that if you go back to, you know, around the merge and like there was a lot of discussion as to, you know, the new ETH, what ETH will become, right? And I feel like I've been Mandela affected or something where one of the huge selling points was this like pristine collateral for decentralized stablecoins. And this is like one of these observed, you know, stated versus, you know, observed preferences or whatever it's called. Like the decentralized stablecoins have only lost market share. So we're not, you know, throwing out hypotheticals here. It's like, this is what people want. You know, they want centralized stablecoins. Yeah.
Yeah. I mean, that's been exactly. Like the stated versus revealed preference. Yeah. It's like pretty clear what people want. And like, you can the thing is like, you can argue and be like, no, people shouldn't want this. And
right, exactly.
That's fine. Like whether or not I think that's true or not doesn't actually matter. To a lot of extents. But the last thing I'll say, like related to all of this is, again, this might be like not that interesting to your average CT participant, to like your point about plumbing stuff.
That's okay. I have a very sophisticated listener class, so they'll understand.
I mean, you probably do, to be honest, relative to many of the other podcasts out there. But like there has also always been this like white elephant or holy grail of unsecured credit or under collateralized lending. And it's a bit of a paradox, which is like, cool, we want permissionless, but also unsecured or under collateralized and with recourse. It's like, okay, well, how does that work? And so to me, like people are trying. There's obviously a zillion people have tried this, and they will tell you, well, oh, if we have like a proof that does this, and like the recourse problem then becomes unclear. Like, cool, you can prove something, doesn't necessarily mean if the borrower disappeared or defaults that you have any real recourse in meat space. But I think that future is more possible today than I think people might appreciate. Like, I don't necessarily think the versions of it that exist today are the right ones. I think they're like credible attempts in some ways of trying to do it, but I think that future can exist if you have I don't know, if you have some sort of permissionless network that does some of like this clearing and settlement with privacy layer baked in. Like, that's like directionally interesting to me, because I don't know of any other way you can kind of like bring those types of markets to crypto, and those are obviously massive markets relative to the collateralized ones that exist. And there's kind of like this insatiable demand for credit that never came back post, all of those centralized versions that were scams and blew up.
Yeah, I'm not so well versed on this, but it does seem, I guess, with uncollateralized credit lending, this market to me seems like the only way to do this that isn't guaranteed to blow up just converges back on something very similar to what we have in TradFi already. Maybe this, like what you're talking about, sort of a more permissionless or privacy focused, but again, even the privacy focused stuff kind of I'm not elated about. I think there's been like a acceptance of Worldcoin as of late, and it's bizarre. It's bizarre because I don't know that the applications or the application of this tech is there to provide like some of what maybe you're talking about currently. In which case, it's sort of it just I don't know. I think there's been like a huge like rally around Worldcoin as of late that I'm somewhat surprised by. Let's put it that way.
You haven't scanned your eyeball?
No. Have you?
No, I have not.
Will you?
No, I don't have any interest in collecting my Worldcoin coins.
Why are you and I skeptical?
It's a good question. I mean, dude, we're literally like anons. Scanning my eyeball, regardless of the crypto element, is just like not something I'm interested in. And people will be like, oh, well, everybody already has your information and knows what you do all the time. And like, okay, whatever. Like, cool. That's
right. So it's cool. It's like, oh, well, Apple, I mean, even though I don't know this is entirely true, but Apple has your Face ID, and it's like, so you should give your Face ID to everybody in the entire world. It's like, okay, is this the logic we're running with here? You should share everything publicly because Apple has seen your face. It's like, all right, I don't know about this.
Yeah, exactly. Until there's some compelling reason that why that I should be doing that, which to date there hasn't been anything. But I don't know. Like, decent chance I'm wrong. So yeah, I haven't scanned it. I don't really think, I kind of agree with you. It's like, cool, people have access to my information. That doesn't mean I'm going to publish all of my information on the internet so everybody can look at it. Like, I don't know. But the identity thing is like real also. That's kind of another mostly unsolved problem.
Yeah. Okay. Yeah. All right. So what applications, not back-end USDC or whatever, dollar transfers, what applications are interesting to you right now? Like, what are you excited about? Let's be optimistic for a second.
Yeah. I don't know if you're anti DePIN or not, but I'm still excited about some of the DePIN stuff.
All right. Well, explain why. Like, like, sell me on DePIN. Yeah. Sell my skeptical listeners on DePIN as well.
So I think that DePIN is interesting insofar as it provides like a better way to scale a network or like a better way to do the initial flywheel of something that people would be interested in, but may not otherwise think is like possible or like a reasonable thing for them to do. I like that's like a very fluffy way to say it, but I'll give you kind of like some of the specific examples that I think are more interesting that don't necessarily exist today, but probably, in my opinion, probably should exist and could exist. The energy one is something that we've been interested in virtual power plants for a couple years because
what is that?
Just think of it as like the idea that you have a network of like self-sufficient energy nodes, call it, and like nodes you can define as like a house or a community of houses or like some small group versus, I don't know, like versus the existing energy grid that exists in the US today. So a world in which you can load balance better at like a smaller level, at like a node level where, okay, cool, I have devices at my house where they're capturing energy from the sun or from some type of activity, storing it locally, and then kind of like deploying in and out of the grid.
When you say storing locally, do you mean like these massive like batteries that can store for?
Yeah, I mean batteries. Yeah. I mean, they don't have to necessarily be massive. That the kind of the part of the stuff that's interesting is that I think a lot of it is the economics of some of the hardware technology. This is like the stuff in DePIN that I think matters and is interesting is if you have a view on the cost curve for some of the hardware or some of these specific things that are going on outside of crypto, then you can like you can look at it as, is this interesting from a crypto angle? Versus what I think a lot of DePIN networks today have done is, hey, cool, I can incentivize supply side with some token to do some like random thing. And nobody actually wants that thing and there's no demand and it's kind of like pointless. And I think there's a zillion examples of that. This is kind of like why I do also enjoy not necessarily working at a crypto native firm, even though I spend all my time on crypto, is because I feel as if there's like I have some exposure to some of these other adjacent technologies that it's like, cool, this is super interesting. The hardware side becomes economically feasible at, the individual or the community level at, this on this time horizon, we think. And so that stuff, like that is kind of the approach that I personally take when looking at crypto stuff is what is the actual problem this is going to solve? And the DePIN stuff, I think there are versions of this that are interesting that can be done. Energy is like maybe one example, but like I also think that there's stuff related to these are also all tie into like the self-sovereignty idea, which is like an overarching thing that I think matters, which is not just in crypto, but individuals. Like, cool, the be your own bank thing. Bitcoin comes out of the financial crisis. But I think that there's tons of distrust in all of these, like even the stuff we're talking about with Worldcoin and like having my data, like there's tons of distrust for normal people with all kinds of institutions beyond just financial ones. So I think like people complain about the grid, like, oh, the grid in the US is fucked. And so like what happens when that breaks down? And so people have these thoughts today. I think the same is true with some other stuff, like water is another one that I think is interesting, where a lot of them start, in my opinion, as like very upper class problems where like people who are well off will tell you like they'll be more opinionated on the types of water they drink, right? Like they'll tell you, oh, I only drink this type of water, or oh, I drink this type of XYZ water, right? And it starts as kind of like some social signal thing for somebody who's well off to tell you why it's so great that they only have this kind of water.
Saratoga Springs or whatever.
What's that?
The Saratoga. What is the?
Yeah, exactly. Yeah.
Go on.
But all of these things, like a lot of things do start as, okay, they're very expensive. And so there's a specific consumer who can do that. But over time, the things that make like the costs come down and it becomes something that everybody does or everybody uses or everybody consumes. And I kind of think water is an example of this. Like you talk to people, like well-off people will increasingly tell you, oh, yeah, we have like a well in our yard, right? Like, oh, we have our own water. And like, oh, we don't use the, the local water because lots of people get cancer in this town that we live in. We don't know where it comes from, but we have our own water. And I think there's a version of that where we'll see kind of like water harvesting systems. Like some of this stuff it exists today where there's like consumer versions of it or like larger community versions of this where people create their own water sources just from like the air. And there's cool technology going on there. But I think like to me, there's versions of this that they're like, I can imagine a world in which doing this in a distributed way is interesting.
The Gwart Show is sponsored by ElLipsis Labs, who I've been following for 3 years now. They're one of the strongest teams I know in crypto. ElLipsis Labs is a small engineering team with a flat structure. They build complex systems, primarily in Rust. For engineers who like challenges, here's the kind of problem they solve. A layer 2 blockchain needs to maintain 100 million accounts and generate a state root after each transaction batch. The root must be built within 50 milliseconds. How would you design a system to ensure the root construction is fast enough? High-performance challenges are core to ElLipsis Labs' mission as they build modern crypto finance. They believe finance needs more than an upgrade. It needs a complete rewrite. The success of their first product, Phoenix V1, speaks for itself, doing over $70 billion in organic trading volume. Now, ElLipsis Labs is building Atlas, the blockchain purpose-built for verifiable finance. I know this team personally, and I like them because they're unique in the crypto space. They have a long-term focus, they work in person from their New York City headquarters, and they're here to build products that fundamentally change the world of finance. If you want to learn more about their open roles, go to ellipsislabs.xyz/careers. Connect the distributed network of nodes to water quality. I'm not saying it's not possible, but connect it for me. Like, where's the unlock here?
You're not saying it. Connect what? Are you asking why a water harvesting system should have a token?
No. No. Well, maybe, but no. I'm just asking, like, connect this needs to be a distributed network. This needs to exist in a decentralized manner, right? Like the self-sovereignty aspect. I get that, but like connect the dots here for me. And it doesn't have to be the water thing. I mean, you could talk about the energy thing or whatever, but like just help, like morph those two ideas together.
Yeah. Okay. Well, I think I think of it more of as like almost shared community resource stuff where it's like it may not be at the individual level as like an individual node and everybody is creating their own water supply from the air. It may be at the community level of this municipality is like a shared network of a bunch of people within the community who are in our best position, whether like it's location, geography, something about where they are that pools water into like an aggregate larger node and like the entire small community benefits from that. And I think there's a world in which, okay, cool, you're one node who's doing this. Like, what is it about? Like there's data capture of like, cool, what is it? Is it the air? Is it the types of temperatures, the moisture in the air? Are there things specific to this environment that make this good or bad? And maybe that's valuable as you think of like, okay, where's the next place that should have this? That doesn't necessarily need to be like, I'm like fully admit that there's a large leap that has to happen between today's world and that world. But also those are the things that to me are more interesting than why should I fund a fifth IP blockchain?
Yeah, that makes sense.
So part of it is like, cool, most of the stuff we invest in is not going to work. Like if we do 30 deals, like 25 of them go to zero. Like most of them won't work, but this is like part of my frustration with venture capital is like most of the stuff, like there is a point at which you're not taking enough risk. Like, I don't know, everything you do in the moment you think is a great investment. The reality is most of them will go to zero. But if you're in crypto doing this, like to me, I just don't see the value. Like, I just don't see what is interesting about funding some of the, I don't know, quote unquote, more traditional crypto stuff that gets funded.
Yeah, for sure. And also you said you invest primarily in the seed stage anyways. So just by like definitionally, you will have, likely fewer projects that work and hopefully massive outcomes when they do. So, but also on that note, I'm kind of curious, and like, do you feel that, see, a lot of you heard me, screech back and forth with Hasib for 2 hours. Oh, a lot of my, I don't want to say, I don't want to sound too, cynical, and I don't want to like belabor this, but there are times where the investment is so big and the valuation is so big, it almost starts to kind of transcend what I view as venture. And that's where it becomes, from my perspective, it's like, you're not writing a $2 million check at, a $20 million valuation or a $10 million valuation, right? Like, you're writing $100 million checks into $3 billion valuations or something, right? And so that does change very much what I view as like the long run venture-like outcome. And so I'm kind of curious, like, do you have a similar view on that?
Yes. I mean, this I've complained a decent amount about market structure in crypto. This is kind of a function of that as well, which is like, we intentionally size our fund and team because we are interested in what our opinion is the size of the fund that we have and the size of the funds that we raise give our LPs the best chance to have the highest return. That is actually the thing that we are interested in. Like, cool, if you're going to LP with us, what we actually care about is being disciplined on the size of the fund, because we have views on how big the markets we invest in are. And every check we do, we underwrite to return the fund. And so we can do that because we size the fund appropriately, in our view. And what that also means is we don't need outcomes that are $50 billion outcomes, because they're like, you think of, okay, how many $50 billion companies get created every year, right? And so
yeah,
not that many. There's like way more $1 billion outcomes or $2 billion outcome companies that exist. And so we're like, cool, yeah, could we raise larger funds and become more of like a management fee fund, or
harvester?
Yeah, which is like, we're just not interested in that, which is, I don't know, like, it's a good model for a lot of people, but I don't know, all of us are kind of like less interested in that, more interested in, if we stink at our job, like, we shouldn't get paid a lot of money. And so part of the sizing of the fund and the team is specific to that. And selfishly, that's also cool. The outcomes we need are smaller. And so there's going to be more of those. And so we think that gives us a better chance to return multiples to our LPs. I think when you're writing like $100 million check fund or checks, that's like more growth. And it's kind of unrealistic to expect that that's going to return, 100x.
Yeah. I mean, like yeah, exactly. And this is kind of where I come from. It's, if something's raising at, a final valuation of $1 or $2 billion, for a venture like investment, that needs to go to 50, 100 billion. From my perspective, of course, I come at this at least partially biased, right? Because like, I do view a lot of this through the lens of Bitcoin. So it's like, from a risk return profile, I think that anything that I allocate to outside of Bitcoin just needs probably much higher, hurdle rate, if you will, for myself than some of these traditional, venture like investments, which is fine. But it seems to me that at that size, it is more akin to growth. And there's also, and this is the point I was making as well, there is guaranteed liquidity on something that's raising at $1 or $2 billion. Like, there will be liquidity. Now, is it going to be a 50x? Maybe not. Is it going to even be a 4x? Maybe not. But I don't think a lot of these things could be underwritten without that knowledge of there will be a liquid instrument that trades permissionlessly.
Yeah. I mean, to be fair to the people also writing $100 million checks at whatever, $2-3 billion raises, for the most part, I assume that's not the first money they're putting in to that company or protocol or team. That's not always the case. Like, sometimes it may be. But this is like an issue with market structure where Yeah. Are you incentivized to raise the next fund, or are you incentivized to like have the highest DPI 7 to 10 years later for your investors? But I agree. It's much more like that is more growthy and that's, I don't know. I mean, that's fine. Maybe it's semantics on, okay, what is the expectations from LPs on the returns of some of these vehicles. But yeah, I mean, the other thing that's kind of like related to this is you can't really, and this is again related to, I think, why infrastructure gets so much funding, is you can't really miss the next Solana, let's say, if you're a massive fund, because it's kind of like, okay, cool, you're the crypto experts who spend all of your time thinking about crypto, and if you miss Solana, it's like what are you doing? How do you miss that? And so like you can't afford to miss a next version of this, because it's kind of like, okay, cool, this is like one of the few hugely liquid like things that you could have allocated a ton of capital into. And gotten
actually
capital out of. And it's like, cool, you can't afford to miss the next one. So you kind of have to fund the next L1, the next L2, the next versions of these things. And that's also a little bit of like why I think we still see these things happen, despite what people on crypto Twitter will like complain about, like, oh, cool, another L2, another L1, one that does this, like a specific one for X, Y, and Z. Like, yeah, I think it's all downstream of market structure, to be honest.
Do you see any real shift towards not infrastructure? Because this is what people regurgitate on Twitter, but I don't know if this is actually the case. You would know better from, I think the inside, if you will. But like, is there more of an emphasis on, okay, we have the infrastructure necessary, or is this just kind of like, words that we read?
I do think people are. I think the last, like, I don't know, maybe 18 months, there's been more application stuff getting funded. Part of again, but like a lot of where I see that coming out of is like the accelerators.
Yeah, exactly.
That's a function of the ticket size they write when they're meeting founders, and like the top of funnel for them is, yeah, cool, we're going to give you like 200K, 250K. That's just like where they play, or where some of the smaller funds play. So I do think more time is being spent on applications. I think fine. It's like fine to fund infrastructure. I don't necessarily have a problem with it, but I think it warps the market for sure. But I think I don't know. I think applications are getting funded more. I mean, you're seeing who knows how long they'll stay around. Like, a lot of these have become ephemeral. I think Pump is maybe the exception, because I think that's activity that will continue to exist in some form anyway. But yeah, I mean, there's maybe too many of these blank dot blanks now, which are
for sure
like some version of I don't know, of Pump, but with all kinds of different things. But I don't know. It's hard for me to complain on the one hand, like criticizing things out of one side of my mouth, and then also saying, oh, we need more weird stuff and experiments out of the other, is a little bit disingenuous. So yeah, I try not to complain too much.
What experiments still need to be run?
What experiments still need to be run? Well, this is like tangentially related to like, what do I think is interesting?
Okay, so DePIN stuff needs to be run.
Yeah, I think more stuff there, but so okay, this is the last like cynical thing I'll say, but one of the things that I am perpetually frustrated by is what I think is kind of like a lack of creativity, just in terms of like in crypto from like a talent perspective. And the way that like you see this is the narratives that happen on crypto Twitter, obviously, right? So, something gets some kind of traction, and then you see 10 or 15 like copy pastas of that get launched immediately. And to me, that's the optimistic side of me says that's actually an indication that there are lots of builders who have time and want to do stuff, but they they don't have like a unique idea or something that they know they want to build or some creative new thing that they think should get built. But they're like, it's like latent demand to do something. And so that's like maybe the optimistic take. The cynical take is like, there's just like a bunch of devs who just kind of like are looking to do ephemeral value extraction things. I don't actually think that's necessarily true. But I think, the creativity side, we're definitely constrained. And this is part of why I spend some of my time thinking about how do we get people in our non-crypto network to be interested in crypto, to build things like Believe is, I don't know.
What do you think of Believe?
Yeah. When it was Clout originally, I downloaded it and was like, all right, let me see what this is. And it was like super buggy and had issues with what stuff was there. And then it came back a couple weeks later. I think it's like, okay, cool. It has way better distribution. That's a good thing. I don't have issues with what they're doing. I mean, I think the burden of proof is, will anything be created, quote unquote, real out of this type of stuff? Or is it just a remixed version of a launchpad? And cool, maybe that's true. And it just has better distribution and that's fine. But I think the idea is that some people launching these things are going to build, quote unquote, real or meat space types of companies. That remains to be seen. I'm skeptical, but
and I mean, also we did have how long ago was Jelly now? Like 6 months. I mean, the only point I would make is people often say, don't sleep on the new meta. Like Hyperliquid was an under discussed, and off the radar meta, and look what it's become. And that actually may be true in the case of Hyperliquid, but for the overwhelming majority of these, we have played this meta. Like Zora, we have played this meta. It's not, I mean, and I kind of go to the, oft repeated phrase of like, something has to be, 10x better to supplant an incumbent or something that does have some degree of traction or product market fit, however we define that in crypto. But that part does, I mean, I guess a lot of things I think are just ridiculous, but that part is sort of almost befuddling when people are like, this is the brand new meta. Dude, we did this 6 months ago. Like, were you here? Like, were you just born? We really did exactly this. So it's fine if you want to do this again, but there's nothing really that novel about this. And that would be, although I haven't played around on Launchcoin or whatever it's called, Believe, right? Like much, but yeah, I mean, come on.
Yeah. The other, what's weird about all these things though is it's generally like, I hate talking like this, but it is like plus EV to try the new version, even if it's something that happened a couple months ago, because like at the individual level, if you are using the thing in the early stages, it's probably like worth your time to be doing it. But that, and then in turn, you kind of want other people to get excited about it because you were using it early. And then at some point, people talk themselves into why it's different or why it's new. The distribution is, I think, different and new.
Well, elaborate on that.
Well, as far as okay, you can just like it's straight from Twitter. There's just way more Twitter users than like the version of, hey, download Friend.Tech and do this thing, or that the distribution is like, cool, maybe this results in more people. They make money off this launch or Believe app. They were never in crypto. It gets, I don't know, some percentage of those people to spend more time in crypto, and maybe some of those people are more creative or more talented and they build something else. Like that's the optimistic view of what all of these things do. But I do agree, it is a version of something that we've seen in the past. I would say the distribution is different. And I think people who are bullish on Believe will tell me that, well, there will be real things that come out of this. But that was also told to me when we were talking about all the celebrity coins. And,
everything ever.
yeah. But one of these times, maybe like, hey, I'm open to the idea. I'm skeptical of it, but
okay,
it's
but
possible, I guess.
It takes like a massive, not a small leap. I would say a massive leap in thinking to believe that there is some founder out there scrolling Twitter who has a brilliant idea, or even just a mediocre idea, or maybe not even a good idea, but could make a small amount of money. And the way he wants to launch his company is by responding to a tweet. Like that is, that takes a, I mean, that, yeah, that alone right there is to me is like, okay, come on guys, come on. You know what I mean?
I agree with you. I agree with you. I
like
think
there's just some
unlikely.
There's some like Sam Altman with 200 followers who's scrolling through crypto Twitter and is going to build the next OpenAI. And it's like, oh, you know what? The way to do this, I should respond with a ticker to this tweet. Like that is capital formation. That is.
Hey, this could be this could be the OG. The who knows? The CS:GO skins traders are now this maybe this is the crop of that group in the future.
Yeah, I mean, obviously, I'm not offended by any of this. So, but I do think I think you're correct that people sort of convince themselves in order to convince others that something like this is a massive unlock, and it's fine. But a lot of this stuff does end up turning out not great for a subset of, or maybe a larger set of people who invest in this stuff. I mean, I think Jelly is a reasonable example here, right? Like that. Yeah. And maybe Jelly ends up, you know, I don't even know what is the Jelly company? What are they supposed to do? You know?
Do I know? No, I have no idea what Jelly is doing.
Okay, well, it was intended to be like a company, right? This is the internet capital markets premise. Have you read it? And so the problem here is that, I mean, this coin did wreck, I don't know, a good number of people. And okay, maybe they're going to, maybe they were going to do this elsewhere. That's fine. I'm not here to, you know, make retail a martyr, but this is not some, you know, positive sum or, you know, net zero sum game. Like a lot of these things do end up as catastrophic disasters. And so that's where a lot of times like, all right, let's calm it down, you know?
Yeah. And then generally people just move on and pretend like they didn't talk about it for like
nothing happened.
Yeah. Yeah. Which is not great, but yeah, I would suspect we'll see the same thing, but who knows? Maybe that's wrong.
Yeah, like I think Friend.Tech is actually a good example of this. What is your now hindsight, like revisionist or not revisionist view on Friend.Tech? Because I have thoughts, but I'm curious what you think just in general about Friend.Tech from inception to, I guess, wherever it is now.
What it is now. I think directionally was super interesting. I think part of, I don't want to speak for Racer, but I think part of Racer's thing was like giving away all of the token was, I don't think he set out to be like, cool, I can like try to trick people by giving away the whole token and then try to get fees. So, but like, I actually think it was like a genuine attempt of like, hey, I actually think there's a time for this type of social thing. It was, I think, the first PWA. So, I mean, that made it tougher because PWAs suck in general. But I still think that there was something there. Like the whole sniping thing also made it really difficult. Like there are all kinds of things that made, like, there's tons of friction. That's like, okay, in hindsight, these like emergent behaviors of how people used it and what people did, or maybe not, I don't know, not recognizable at the time. I think after the fact, people will be like, oh, how could you not think about this and that? And it's like, I don't know. I view that as, 2020 hindsight and people kind of like just like jeering from the sidelines about it. So I don't know. I thought it was one net new, novel, cool. Like, all right, this is interesting. I don't know. I think it got more shit than it maybe deserved after the fact.
Yeah, I would agree with that. And I also agree that giving away the token was not intended to be like a fee. Like, yeah, I agree. It wasn't intended to be like a fee farm. I just I think that maybe if I was to give a slightly different or additional point, was that there wasn't much more to do with it, or if there was, I think taking it from the level it was at to competing with, I don't even know what you would say Friend.Tech was initially competing with, like Twitter, or you know what I mean? I mean, that's a massive stretch, but
almost like private, like paid
right,
groups.
But that seems like a very like niched TAM already. So I would think that the goal would be bigger than that. But yeah, I just don't know that there was. It was kind of like the entire thing was pretty much 90% of it was completed from the beginning, and then once the token kind of launched, like, okay, what do we do now? And I think that's where some issues came about, because we, the users, also didn't know what we wanted now. It's
Yeah.
like, okay, there's the token, like we're good to go now.
This is a problem with all the social stuff, right? Is like the user actually, I'm not sure, knows what they want, and so they're very reliant on the team to be like, okay, keep pushing stuff that keeps us interested until it's like, okay, does this do anything outside of have a paid room and I can trade people's tokens? And
right.
Yeah, there wasn't anything after that. But I don't know, like how many Web 2 social apps get launched every day that just die because cool, it's like somebody used it and it's like, all right, whatever, I don't really care about the social app.
Yeah.
Yeah.
Yeah, I would agree. Are there any
to the point, like you saw a zillion copycats of that after the fact? Like, hey, Friend.Tech did it wrong, but we're going to do it right this way.
Yeah, and every single time there's like diminishing returns with both users and actual value creation or extracted or market cap for some trivial amount of time. It's like that roller coaster, you know, where
it's euthanasia roller coaster.
Yeah, it really is. But that seems to apply. I mean, that going back to what you were saying about the pumped up fun thing, I feel like that applies the exact same way there, right? And each one has sort of diminishing returns, and then does the one at the top of the euthanasia roller coaster even persist? We'll see, you know? So it is hard to kind of gauge this. And also why a lot of like my skepticism comes in, or not skepticism, I keep saying it like I'm very cynical, but more just like what I've observed is that a lot of this stuff has like a relatively short half-life if you're actually looking at, you know, for 12 years out in the future, like sort of at least following cycles, or from your perspective, like funds, you know, you're investing, I don't know, 7-10 years, and man, it's hard, right? With crypto stuff. Like what from 10 years ago are we still using? Ethereum, I guess.
Yeah. Well, also because, but the other thing is like lots of these things just to me look like features. They don't, or even products, but they don't appear to me to be venture scale companies. And I mean, sure, Pump is a counterexample of like they make a ton of money, and lots of people would not have funded that because they'd be like, whoa, like how does this thing actually, like how the hell does this become a venture outcome? Like what do you think, how many coins are going to get launched every day, and you're going to take fees and all that stuff? But a lot of these like social things to me have just looked like versions of, I don't know, like features. And I don't know, I think you have to have like a view of, cool, this is the first thing I'm going to build. And like users will use it in this way, and like I'll iterate on it, and then that will actually lead to like the next thing and the next thing. And like having at least a thought, or like having thought through multiple levels beyond kind of the initial, like, let's see what people think.
When you say features, like they are small innovations as opposed to something that can be a sustainable product unto itself. Is that what you mean?
Yeah. Like even like if you take examples of these things, like, cool, you have a room and people can trade like social tokens and you can have these private rooms. Like, okay, that's one version of that. One version of that is it turns into some like pump fund scale outcome because, wow, people actually there's like way more demand for this thing than we thought. The more likely outcome, in my opinion, is cool, people will use this and try it, and it's maybe interesting if there's other things within the application that they want to be doing. And maybe versions of that are like, I don't want to like, okay, time.fund is another one. Like, cool, you can like buy time and people have markets for time, whatever. Okay, cool. Like that's interesting. But I think you need a lot of these things and you need reasons for people to keep coming back. And to me, a lot of them look like, features, not like venture scale businesses.
Yeah, they're almost like I have the same thought, not exactly the same, but similar, where a lot of applications and a lot of projects are like, okay, this is just a plugin for something else. Like this is literally a feature that Twitter or Goldman Sachs or somebody can just integrate quite easily, and it's not something that has like a definable moat as a result of it being extremely innovative and like be able to kind of capture and retain users.
Yeah, exactly. And I don't know. Sometimes it's like, are these mechanisms better ways to create real world products that people want? Like that's also possible, and potentially interesting. But that also requires like a skill set, I think, that is very different than
crypto founders,
crypto native, crypto only founder who's like built DeFi protocols or built something in crypto exclusively.
Yeah.
And that's again comes back to like the creativity and talent thing, where I think the space would benefit hugely from people with more diverse like specialties or talents beyond what we have today.
Yeah, I agree. Okay, well, we've actually talked for quite a while and we had no plan, so that's good.
Yeah, we did.
Thanks for coming on. I feel like we covered a lot. Is there anything else you want to
add? Anything else I want to add?
Did we miss anything?
I don't think so. We didn't have a cheat sheet of stuff we wanted to talk about anyway. So
we just ran it.
If I think of something, I'll just bug you and be like, hey, and we got to record again. I got some stuff.
Well, we're not going to record again. We'll just put it in the end of the episode. How about that?
Okay. Yeah. Just a monologue.
All right. Where can people find you? Oh, you have a podcast too. Show your own podcast.
I do have a podcast. I haven't recorded in a while, but I am going to be, I think, recording a couple more episodes the next week or two. It is called Smac Talk, and you can find me on Twitter at 0xsmac.
Epic. All right. Thanks so much for coming on. Appreciate it.
Thanks for having me.